All right, y'all, back to work. Final week of August, final week of the summertime season. And boy, it smells a lot like bull traps on the charts right now. In fact, if we play our cards right tomorrow, we might get some nice bull traps for some shorts, buy a nice deep pullback off a breakout pullback zone. I'm going to cover the entire roadmap in tonight's video because we get some great trades setting up for tomorrow. I want to make sure you have a roadmap, a game plan to make some money as well. So charts are ready. As always, thanks for tuning in. I missed you guys last week. Let's dive in right now and make some money. It should be a pretty easy Tuesday session. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready, aren't they? I have 4 clues on these charts telling me where I think the money is made tomorrow. First clue is right here on the highest time frame, the hourly chart. I like to use the hourly chart as an overall directional filter. Very easy to see right now. The S&P SPY bullish right now. The Nasdaq triple Qs are bullish right now. And notice what you see right now. We're bullish on the hourly time frame. That's our overall directional filter. But look at how close we are right now to the all-time highs. Look at that big breakout pullback, major resistance overhead here on the Nasdaq. So we're definitely a bull market, but we're very high up right now compared to where we were before J-Pow kicked this thing higher here at Jackson Hole last Friday. 1 of 4 clues is we're bullish and we're very high up right now. Second clue is over on the calendar for tomorrow. I have 2 events I'm watching tomorrow. Durable goods orders at 8:30 Eastern time. Consumer confidence at 10 o'clock. Remember, anytime we see red star news events at 10 o'clock Eastern time, you best be paying attention. That's our second clue for tomorrow. Big news at 8:30, even bigger news at 10 o'clock Eastern time. Be aware of that. The third and fourth clues are down on some lower time frames, some tick charts. We're not going to trade off time charts. Remember, the hourly chart is just for the overall direction. I have 2 arguably more important clues right now on these tick charts. And by the way, guys, if you're tuning in for the first time tonight, all the time frames, upper left-hand corner, that is a 7,000 tick chart. And that moving average is the only indicator we need. We don't want to overcomplicate the process. That is the 21 EMA. There are 2 really big clues right now on the tick chart. First clue, stacked ranges. There's a range back here and a range up there. Remember, the most recent range is the one we're seeing above us right now. That recent range acts like a magnet. The previous range loves to break out pullback. We call these stacked ranges. It's a range that finished the week last week. We pop up into a new range this week, and we know right now where the buyers are waiting right now. They want to buy that breakout pullback. That is definitely my favorite spots to be a buyer tomorrow. But there's one more clue though, one very important clue here. Look at this move right here. Look at the separation as I zoom in on this chart right now. Look at how price separates and grinds away from that moving average. Remember, anytime price separates away from the 21 EMA, it means a very strong move. Now, why is it important? Well, because anytime we see a strong move going lower like this, all of that momentum is very difficult to stop, and usually we see another leg in the same direction. So that's a very big clue for me, because now put all these clues together. We're bullish overall on the higher time frame. We have this huge open space down below us. Look at all that wide open space before we get anywhere near any level of support here. This is why I said earlier, it smells a lot like a bull trap right now. Now, speaking of bull traps, to short a bull trap, to short a bull market like this, it requires a slightly more advanced tactic. I'm going to cover that a bit later on in this video. We're going to build up to the most advanced tactics for tomorrow. But first, though, I mean, let's face it. Hopefully we see a big, strong move going lower. I would love to get a rug pull running lower. And again, I will talk about how to short this thing. I will talk about that bull trap entry in just a moment. My favorite trade, though, for tomorrow is run this thing lower. Get all the rookies to think this is a reversal. It's not a reversal. It's simply a breakout pullback. Now, you know me. I'm not going to blindly buy down here, right? That's just suicide. What I'll do is use that 21 EMA and wait for the price to pull back to that 21 EMA, because is this a good place to sell? What do you think? We're overall bullish on the hourly time frame. We've got a range above us as a magnet, a range below us for a breakout pullback. The answer is obvious, right? This is the last place you want to sell, but I can almost guarantee you, though, the rookies in the market, they're not going to see this bigger picture. They're going to see this thing rolling over, and they're going to think this thing's reversal. So let's trap them in right now. Wait for the price to pull back. Let them try once. Go higher. Why higher? Because sellers want to sell high. Once I have those bears committed, now I know where their stops are. No. Now I know where their pain is. Now I know where those rookies, where those stops get hit. And if you're caught short, getting stopped out, you buy your way out. We call these bear traps in our trade room. 1 try, 2 try, bear trap. Now, remind me again. Where's the market want to go? It wants to go back into that range overhead, because that range above us is a magnet. Okay, if we're lucky, that bear trap down here, it will jump running higher. And if you recall earlier, I mentioned separation off the moving average. This is where separation comes in handy again. Watch this closely, because it's an easy way to double our profit on this trade right now. Shallow pullback, higher high in price. Notice the separation I'm illustrating here on this chart. That separation, that's your cue now. Higher high in price. It's an add-on trade. In our trade room, we call these bear traps off the low, 2 try bear trap, and an add-on. Remember, the strength of that move is the separation off of that moving average. Bear trap, add-on, back into the range, up overhead. Now, let's talk about 2 variations of this, because this is the dream scenario for tomorrow. Let's talk 2 variations, though. That way, if we don't get this dream scenario, you'll have a roadmap to do with whatever we get tomorrow morning. For example, sometimes we don't get that bear trap down there. It may run lower. We may not get that bear trap and back up again. It may just whoop and run right back up again. These are challenging, so pay attention. If it V-bottoms off the low, what happens is, as it goes higher now my risk-reward ratio is killed. Think about it this way. If I run lower, if I see bears once, bears twice here, I can take a small amount of risk for a much larger amount of reward. But that risk-reward ratio isn't that great if it pops up really strong, right? I don't want to buy up here. Now, risk-reward is way off. To fix this problem, all we do is look for entries underneath a prior swing. So if we don't get the bear trap down here, if it V-bottoms off that low, my focus will be higher highs in price and getting in under that prior swing, strong green candle above the moving average, just like I teach in our free video classes. We call these V-bottoms. If we're really lucky on this, there'll be a channel off the highs, off the low. I mean, that is a gorgeous, gorgeous technical bear trap. If you're in my free video class, we call these V-bottom reversals. Another thing you want to think about too is oftentimes we'll run lower. We'll get that bear trap down here. It'll be a winning trade. It'll pop up. But remember, ranges, they love to what? They love to break out pullback. So every once in a while, we'll get that nice deep pullback. We'll get that bear trap down there. We'll take our 1-to-1 target, like I teach in the free video class. We'll stop to point of entry. It's a winning trade, but it doesn't keep on going for us. It rolls over, retest that low, and repeat after me. Do it again. These retest trades, we call them our trade room. We run down, we pop up, we retest. These retest trades are oftentimes our biggest winners in our trade room each week. It's the exact same trade here. Run it lower. Don't pick that bottom. trap those bears in twice, like I teach in the free video classes. That's a bear trap. And again, we're bullish overall with that range above us. Keep looking for that bear trap, that separation off that moving average, that higher high in price, and that add-on. I'll tell you right now, I love these retest trades. And because that pullback could be very large, it's very likely for tomorrow we'll get some variation of this retest trade. So definitely keep that on your radar. Now, I want to talk about now, if we go higher, how I can short this thing back down again. So if we play our cards right, we might get a chance to short this thing off the highs and then buy it on the way back up again. Before I dive into that though, let's slow down for 2 seconds, because I know a lot of you guys watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this could be a brand new language I'm speaking, a brand new strategy I'm talking about here tonight. Don't you worry though, because I teach this entire roadmap, the entire trading strategy in my free trading course. In fact, I have a ton of examples of all of the entry patterns I'm talking about right now. Guys, bottom line is the markets are way too good right now not to be banking profits each day. What I'll do is I'll put a little link up top here for you, upper right-hand corner, hit that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells me exactly where to find the winning trades each day. You'll laugh when you see how simple that technique is. More importantly though, let's face it, we make our money by timing good entries. So in that video course, I'm going to teach you my 4 favorite entry setups so you can time better entries, get your confidence back in your trading once again. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, what are you waiting for right now? Hit that link that popped up there. Watch that free trading course. You're going to love all the trade examples I include in that short video series. The best part is, though, it's completely free for you. Also be aware, too, guys, I'm going to put all the important links you need to learn this strategy, time better entries, get your confidence back in your trading. I'll put all the important links below the video in the description of the YouTube video. Definitely start first on the free video course. Most folks start making money all on their own, all from that free video class. So definitely start there first on the free classes. Oh, and don't forget too, we trade together every morning, 8 o'clock Eastern time in our trade room. I'll put that link below. And if you're on Twitter or X, I post a ton of videos and charts and mindset stuff on Twitter X during the day. If you're on the X platform, give me a follow. Again, all the links you'll need, the details you'll need are below the video, linked below the video tonight, description of that video. So I wanted to pit stop there because a lot of you folks are new here watching for the first time right now. Take that free course. This will all make a lot more sense once you dive into that free video class. Okay, I talked about earlier how I love the idea of that big run down, that bear trap back up again, and how we might get that run down, that retest. Love the retest for tomorrow. Now, I want to talk about bear traps, how we can sell this thing going lower. Before I do that though, one last way to buy this. What if we don't see this thing? What if we don't see this go lower here? I mean, after all, it's a range right there. And what do ranges do? Remind me again, ranges, they love to rotate, right? So that range right there, we may simply rotate back and forth here because again, ranges love to rotate. The amount above, the amount below. You'll learn this technique more detail in that free video class. So as we go higher here, if we don't get that pullback, what's my concern right now? My concern right now, remember, we're bullish, but we're still pretty high up right now, all right? We're a ways away from where that J-Pow announcement was last Friday. We're very high up right now on this higher time frame. So as we go higher here, I'm worried I'm buying too high. There's an easy pattern though that solves that. The way I'll be looking to buy this, if it rotates higher, is I want to see separation off the moving average. Remember, it's all about separation. Like over here where it pulls back and it barely misses that moving average, right? Separation, higher high in price. Get below that low, and I'm looking for, this would be a technical bear trap like I teach in the free video course, and we'll try to run this thing back up and take out the high of that trading range. Now, I'll be honest, this is not my favorite trade right now, right? It'll be a half-size trade for me overnight, pre-market, tomorrow morning. My favorite trade right now is I want to see this thing go up, dump back down, and bear trap it down there. And that reminds me now, let's talk about now, how can we sell this, right? How can I sell this going lower? Let's do that next up on the Nasdaq. The Nasdaq looks ripe for some bull traps. And the bull traps talk about now, these will apply also over to the S&P as well. Now, before we dive into the Nasdaq tonight, if you're enjoying this video tonight, please help me grow this channel. Hit that like button for me. Make sure you subscribe. As always, I know we're busy people these days. I appreciate you all watching my videos here tonight. So as always, thank you guys so much for the likes, subscribes, all the ongoing support. Now, I promise I'm done begging for likes here. Let's now dive in and talk about the Nasdaq right now. We mentioned earlier that right now we are definitely bullish here overall. I do understand we had that big drop down middle of the week last week, but do not confuse this. This is not a bear market overall, right? Every time we've seen a big drop right now, the buyers are coming right in and buying it right back up again. We are definitely not a bear market. Please don't confuse this with a bear market right now. What I will say though is you can easily see here on the hourly time frame, there are those stacked ranges, right? There's a range right there. There's a range right there. And again, what do these scenarios tend to do? The current range, right? This most recent range, this one right here, that's our magnet. The previous range is a breakout pullback. So right away right now, you can easily see in the hourly time frame pretty much where probably the best entries are going to be tomorrow and later on in the week here. But let's dive into the tick charts though, because the tick charts are where I think the biggest clues are right now. Slight difference here on the Nasdaq, and you'll see how this all kind of plays together here in a moment between the Nasdaq and the S&P. Two ranges, right? This one range right there. Anytime we see a range breakout, a breakout pullback, that's an easy clue if you guys watch these videos quite often. But look at this clue right here. Speaking of ranges, this is where things get really interesting. We popped up into a range here, but then look what happened. They broke out going lower into a new range. Now remind me again, what do ranges do? They're magnets and they love to rotate. So you tell me, right? You tell me, right? A bear move down into a range, we pop up and now we are rotating off that high. You know where this market wants to go. It wants to punch its ticket right now and take out that pendulum swing, which you can see here is just perfectly calibrated with that breakout pullback zone waiting down below. So knowing this, all the same entry tax we talked earlier in the S&P can all be applied right now on the Nasdaq. Get this thing running lower, get some bear traps down in the breakout pullback zone and squeeze those stops running higher here. And again, remember, anytime we see a really big pullback like this in an overall bull market, do not be surprised if it V bottoms off that low. Remember, if it V bottoms, get in as low as you can underneath prior swings. Or one of my favorites is that retest trade, right? The retest trade. Let it run lower. We may or may not get that bear trap down there, but oftentimes we'll pop up, run back, retest a low, and a great spot for a bear trap on that retest as well. But how would I sell something like this? Right? Because at this point, we're rotating off the low, off the high of that range. How would I sell something like this? Well, earlier on in this video, we talked about how if we go lower, bounce back up. Remember that separation technique I mentioned earlier, where it separates off the moving average, higher high in price? That same separation technique going higher can be applied now going lower, right? Okay, so what does it look like? It looks like this. As we go lower here, I'm looking for separation off the moving average, a lower low in price, and a move right above that high. So again, the moving average comes over. As we start pulling back, we're not pulling back all the way, right? Again, we may not we may not pull back all the way here. So if we get that lower low, we're separating off that moving average. That now sets up for what is basically a technical bull trap, like I teach in the free video course, right? It's a lower low in price, above that high, strong red candle now for the signal, closing back below that moving average, and we're off the races running lower here. That would be an easy way for us to sell this market on the way down to that pendulum swing. Once we complete the pendulum swing, basically once we complete that symmetry off the high, once we're down in that key area of support, we're in the breakout pullback zone down there, then we can think about going in for that bear trap running higher here. Okay, so think about as we're going lower here right now, as we're going lower here, it's above, it's above a prior swing. Now, here's another technique I'm watching for tomorrow. For example, right, we might have a breakout pullback off that trading range, right? That's a trading range right there. There's a chance here we may break out, pull back, and bounce going higher here. But this is where we could beware, right? Where are we? We're right around these big highs right here. It's very difficult to want to buy right here. It's very difficult to find a good risk-reward ratio in this area right now. So as we go higher here, the way I sell something like this is what I call a crown reversal pattern. It's very simple, called crown reversal pattern. As we go higher here, remember, we're overall bullish, okay? So two things about this one. First, we have to trap in buyers and use their stops to fuel the move back down again. That's the first thing. Second thing is, on a crown reversal pattern, because I'm going against the overall direction on the higher time frame, for me, these are always half-size positions, quarter-size positions, right? If you're not making money going with the overall trend, this might be a zero-size position, a demo trade, a simulated trade, a practice trade for you while you're practicing. So just be aware of that, right? Okay, so crown reversal, half-size trade against the trend overall. It's buyers trying once, it's lower low, it's buyers trying twice. Now watch closely because this is what makes a crown reversal. It's a lower low, a move above the high there, and a strong red candle closing below that 21 EMA. You'll see lots of variations of this on these charts. We go up, buyers once, buyers twice, above that high, sell back down again. We go up, buyers once, lower low, buyers twice, get above that prior high. And again, half size trade for me tomorrow, maybe a quarter size trade for you, right? Strong red candle, closing back below 21 EMA. This is a crown reversal pattern. It's two tries for the buyers. And the most important thing is whenever I'm going against the overall trend, I need to be getting in above prior swings, all right? Above prior swings. We go lower, right? We go lower overnight. The goal is get in short above prior swings, right? Gotta be above those prior swings, right? Whenever we go against the higher time frame direction, it's always got to be above those prior swings. One last thing, though, I want to talk about here tonight. If we were to grind down, it's summertime trading. If we were to grind down here overnight, if you're with me in the trade room each morning, you know that grinding trends are very difficult to stop. Most of the time, a grinding move down will wind up going sideways in a range. Why do I say this right now? Well, because if we get a really sharp move down, right? A nice big rug pull going lower, bears once, bears twice, back up again. That's a pretty easy trade if you ask my opinion. But both the S&P and Nasdaq were summertime markets right now. So do not be surprised if we grind going lower. Now, if we grind going lower, that grinder is not going to separate off that moving average. It's going to be very slow, very sleepy. Now, two things about grinders. Grinders are very tough to stop. The best trades are always the retest on a grinder, okay? So again, one scenario is it's a quick run down. Buy the dip, bear trap back up again. But if it grinds down, slowly grinds down, it's going to drag down all the moving averages with it. Very difficult to stop that move. If we grind down, no separation, look for that retest. The retest trade is always the best trade in a grinding move down. Okay. The second best trade is basically a bear trap. It's a crown reversal pattern, but flipped for a bull side. What'll happen is it's bears once, higher high, it's bear twice. So two things I want to think about here. And again, my job tonight is to get myself ready, get you ready for whichever one of these scenarios I see, because I don't have a crystal ball. It may seem like that sometimes, but all I know is these ranges like to rotate. All I know is where the best odds of success are based on the scenarios I'm talking about in these videos. So if it grinds down, my focus will be bears once, bears twice, but unlike a typical bear trap where I buy above that high, right? Basically buy in the stop loss of the sellers. On a grinding move, I want to buy below a prior swing. And again, do not be surprised if we see a 1-to-1 first target, get that stop moved up quickly, get rid of the risk on that trade, and it makes another run going lower. But remember, once again, when it retests that low, we're not a bear market on the hourly time frame. This is the tick chart. Remember, tick charts are used for entries, not for direction, right? So we don't let a retest trade confuse us into thinking it's an overall bearish reversal. It's not. On the retest trade, though, now, I can be a lot more aggressive. Bears once, bears twice. On this one, I can now trade a typical bear trap, right? Bears once, bears twice. And again, after a bear trap squeezes those stops, look for that separation off the moving average, and whatever you do, add to that winner as we rotate higher. So one final version of this, if it grinds down like that, I'm going to be a little bit more cautious on the entry, getting in under prior swings. And do not be surprised if that grinding move down, if it retests that low. The retest trade is always the best one whenever things grind there. So now you know how we sell it as it runs lower, how to buy it back up, how to short this thing on a crown reversal. And if I'm way wrong on this, if this thing just rips, remember, we don't want to buy high. We're buying breakout pullbacks off that previous range. We'll talk about that tomorrow morning in our trade room. Now, speaking of tomorrow morning, 8 o'clock Eastern time, that's the game plan I have for tomorrow. But boy, anything can happen these days in these wild markets. Come join me in the trade room, because the place to be, the easiest way, start making money in these markets, to come out and learn and trade along every morning at the opening bell. As always, I'll put all the important links you guys need to learn the roadmap. Link below the video tonight. Grab the link there. You're going to love that free trading course. And then, of course, come join the trade room, and we'll do it together every morning at the opening bell. In the meantime, y'all, hope you enjoyed the video tonight. I missed you guys last week, as always. Great to have you back here on the YouTube channel. Be well out there. Be nice to each other, will ya? Go make some money tomorrow, and we'll see you guys next time. Adios, amigos. Bye for now.